Welcome to the Pulse Debit Regulations Resource Center. I'm Steve Sievert. Today we'll discuss the current regulatory environment and the impact it's having on financial institutions, and also look ahead to some regulations that may be looming on the horizon. And joining me today to discuss these topics and more is John Costa, Managing Director at REMA Consulting Group. John, thanks for joining me today.
Steve, nice to be here.
John, certainly a lot of discussion, a lot of headlines over the last year about the Durbin Amendment and the resulting regulations, but that's certainly not the only consideration for issuers. Basel III is another consideration, and Basel III, by way of a brief overview, is going to require financial institutions to significantly boost their capital reserves, and you think this could actually be of benefit to debit use going forward. Walk us through your thesis.
Sure, Steve. So we think that Basel III is really a sea change for the banking industry, and the magnitude of the increased capital is really rather striking, and it will have implications for many years to come. The regulation itself does get phased in over a period of time, but specifically for debit card issuers, I think Basel III has both direct and indirect benefits. So the direct benefit is Basel III forces banks to add two new calculations to their overall regulatory capital set of metrics. Those two are a liquidity funding ratio and a net funding ratio. The liquidity coverage ratio, was a changed liquidity ratio. There had been one in the past, but the new one is calculated in a different fashion, and it's calculated in a way that actually further would accelerate the trend to debit or support the trend to move to debit. For example, the liquidity coverage ratio has an assumption that during a stress period, wholesale deposits will kind of disappear. They evaporate in 30 days. Retail deposits, however, are treated as only running off 5 or 10% during a stress period. So it would behoove an issuer or a bank to have more retail deposits. That's a good thing for debit card issuers, obviously. On the indirect side, Basel III also has a major impact on lending businesses. And specifically in the credit card world, moving from Basel I had a regulatory Tier 1 capital of 4%, moves to 8.5%, so more than doubling. And that doubling, or more than doubling, now applies to a much larger asset base because of some other changes. So the accounting rules changes that went into effect a couple of years ago, FAS 166 and 167, have caused credit card issuers to consolidate all of the off-balance sheet activities that they had. And for many card issuers, half of their portfolio was off-balance sheet. So the regulatory capital burden on the card business is going up very, very dramatically, and we think that's going to have lots of ramifications.
So with access to credit potentially limited for consumers going forward, how do debit card issuers take advantage of this?
So we think, agreed, that increasing capital will in fact lead to a retrenching, and it also, we think, leads to a change in the way issuers will think about, the credit card issuers will think about their marketplace. And for example, we think that there will be a tendency to have a kind of a barbell effect. And we expect credit card issuers to focus on the super prime consumers and on the subprime consumers, which really means that there's a big kind of middle core section that's going to have less attention than it had historically received from credit card issuers, makes them ripe to be solicited and converted to debit card. And we think it's really just continuing a trend that's already started, because that middle tier is kind of where many debit card issuers are finding fertile ground right now.
Well, let's transition for a minute to talk about the Consumer Financial Protection Bureau. A lot of discussion in the industry about some actions that the Bureau is either contemplating or may be taking. What do you think will be the result of the Bureau's oversight of the financial services industry?
I think the CFPB, and we've spent a fair amount of time with some of the folks there, I think there's an awful lot on their plate, and there's an awful lot that they're going to be focused on. And I try to look for governing principles that are likely to drive them. And I think one of the operating philosophies, this is sort of generic, but one of the things that is behind many of the rules they'll be promulgating and many of the enforcement activities they expect to engage in, I think, is this desire to have greater transparency in customer communication. And in a sense, I think debit cards look better than other consumer products in that sense. I think they're generally liked and understood. So from one angle, the CFPB, yes, there's concern about overdraft for sure. But in general, I think they'll be more directed at some other activities.
So in the wake of Durbin, there's been a lot of discussion about how issuers are not happy with the regulations. Merchants, who obviously were proponents of the Durbin Amendment in large part, are not pleased with the outcome. And then there seems to be very little benefit resulting for consumers. So is there a business model out there that essentially gets everyone on the same page?
Yeah, that's a great question. It's certainly what the industry is grappling with. And if we look at how some banks reacted to the Durbin implementation, we saw a few false starts, monthly billing, monthly fees, things like that were quickly retrenched and pulled back. So I think there is a desire in the debit card industry to look for a model that's supportive of that's viewed for transparency, but also kind of help restore some profitability. We think we're in an evolutionary period, right? We think these models are going to continue to develop. There are some outside influences that may impact how this eventually develops. But one of the things that again we see in our research that leads us to think that if you step back and ask consumers what is it about debit that they really like, far and away the thing that comes through from all of our research is consumers like the budgeting aspect of debit, and they feel it helps them stay in control of spending. So we think one of the ways that issuers may in fact take advantage of that inclination, and in fact also do something that I think the CFPB would think is generally a good thing, would be to, let's say with the millennial population again, why not incorporate debit into a suite of personal financial management tools? And we know that some issuers are starting to go in that direction. They're adding budgeting tools and software to websites, things that I think consumers are willing to use. There may be profit opportunities for banks in providing those tools, but in general, I think that's the kind of thing that would be supported by regulators, embraced by consumers.
Well, John, thanks for the insights today. I really do appreciate your time.
Thank you, Steve.
And check back often for additional updates and insights right here on the Pulse Debit Regulations Resource Center. And you can also follow us for regular updates on Twitter. We're at Pulse Network. Until next time, I'm Steve Sievert.